Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day, but first, let's go straight to our top story. Despite the disappointing first quarter GDP print, the government is sticking to its full year growth target of 6.5% to 7.5%. And for the economy to achieve at least the lower end of this target, NEDA Undersecretary Rosemarie Edilion said GDP will need to grow by at least 10.1% over the next 3 quarters. That's after GDP contracted by a bigger than expected 4.2% in the first 3 months of 2021. Economists believe hitting a quarterly 10.1% growth rate could be challenging as protocols restricting mobility are still in place. But NEDA Secretary Carl Kendrick Chua has expressed optimism for the rest of the year, saying the Philippines has 8 months to catch up. Chua said economic losses from the recent stringent quarantine measures could still be offset if the economy is safely reopened, vaccination is fast-tracked, and the ongoing relief programs are implemented. The DBCC will meet this month to reassess the government's growth forecast for the full year of 2021. Just quickly, before we go to the market update, I felt that very strongly this morning, and we did get confirmation that there was a magnitude 5.8 earthquake, which rocked Abra de Ilog in Occidental Mindoro at around 9:09 this morning, and FIVOLX is expecting aftershock. So stay safe, everyone. We've got more on that story later on. Meanwhile, we have some better news, let's say, to report on the virus front. Finally, the country's new caseload was below 5,000 yesterday. That was at 4,734 cases. And this, according to Vaccine Czar Carlito Galvez, he's saying now that there will be 25 million people to be inoculated by Christmas time. And these 25 million people would be coming from the most vulnerable sectors, of course, healthcare workers, senior citizens, and people with comorbidities. He said that the target is, of course, to have a better Christmas this year. And he says that according to the World Health Organization, this is what we call burden of disease, burden of death, and burden of hospitalization. So if we contain those, that is the low target, the 25 million, and the high target will be 50 million by the year end. And you can see on my terminal here, however, we are quite far from that target still. As of last Monday, we've got 2.4 million doses already administered and 1.9 million individuals inoculated. Let's open the markets this morning. Sadly, back below 6,300 levels after we showed a strong face. Amid that disappointing GDP print for the first quarter, we are down by 0.5%, a sharp decline after the open. And of course, yesterday, despite the fact that we did end in the green, most of it was actually in the red, as you can see in my terminal here. And it was quite an erratic trading session. Meanwhile, if you do want to look at opportunities in other parts of the ASEAN and vice versa, you do have a new opportunity here. The Philippines, at least the SEC, the Securities and Exchanges Commission, says it has signed supplemental memorandum of understanding with the counterparts in Malaysia, Singapore, and Thailand to enhance capital market connectivity. So this is now the Philippines being a signatory to the ASEAN Collective Investment Scheme framework, and therefore Philippine investment companies, or if they are qualified, will be able to offer the eligible funds to retail investors in Malaysia, Singapore, and Thailand, and vice versa. So exciting times there in terms of market connectivity in ASEAN. Meanwhile, all eyes are on what the Bangko Sentral will be deciding later today. That announcement comes at 4 p.m. this afternoon. Will monetary policy continue to do heavy lifting? In a survey by Bloomberg, of 20 out of 21 analysts say that the Bangko Sentral will hold at 2%. This according to Barclays Bank. Lingering inflation concerns and negative real rates say that there is limited scope for the BSP to inject even more support. Now, here to weigh in on all of these developments, we have with us Mike Enriquez, CIO of Sun Life Financial. Good morning, Mike, and welcome to the broadcast.
Hi, good morning, Danny.
Mike, let's kick off with the index. Quite a surprising end yet to yesterday, if I may say so. After trading very erratically, we still managed to pull through. But then you can see that that doesn't seem to be sustained this morning. What was going on here, and what are the markets really digesting after that disappointing print?
Okay, Danny, for one, you have to monitor first the volume. Yesterday, yeah, we were able to escape a downturn in the market in spite of U.S. markets falling, and in spite of the bad news on our GDP for growth rate or contraction for the first quarter. I think right now, the investors are more looking at number one, COVID-19 cases, the progress on the vaccination. Although right now we're in the midst of first quarter earnings results, mixed results so far. But I think as far as the market is concerned, it will continue to be directionless and just hovering at a very narrow range between 6,200 to around 6,400, 6,500, until probably we can see a more definite direction in terms of sentiment improving as vaccine supply will start coming in. It's really that more than in GDP.
Mike, are the caseloads still being reflected in the market movement? Because we have seen lowering cases in the past few days, and the Okta even says that this will be moving forward better, and there's some recommendations already for GCQ by May 15. Is this going to be cause for some optimism, at least in the short term?
Well, definitely easing of quarantine measures will improve sentiment of investors. It's really more the cases being highly correlated to more easing of quarantine measures. I believe yesterday's low figure was brought about by there were several laboratories who weren't able to submit. So it's usually artificially lower on Tuesdays. But I think then again, having said that, it's really more on the capacity of hospitals, and I think that's the main driver of quarantine measures. Particularly, we're monitoring active cases more than the daily case counts. It's really more in the active cases, and good thing to note is active cases have been declining on a daily basis, so that's good news. If the government decides to ease quarantine measures by the mid of this month, then definitely it would improve market sentiment. And I think if you recall, prior to the end of the first quarter, we were supposed to go to a more relaxed quarantine measure than GCQ until the cases started to spike again. And that has brought about a lot of optimism on markets until the government decided to really pull the trigger again and bring us back to stricter lockdown.
Mike, do markets still care about what the BSP is going to be doing later on? And did you see in the first quarter earnings of the banks? Of course, we had a low base here in 2020 as well. There were a lot of provisions. But can you see at least some effects of the record low interest rates in terms of, maybe the margins should have been affected, but then loan growth should have also gone up? Is there still some connection between the earnings and the policies of the BSP?
Well, that's a good question, Danny. And if you monitor the loan growth of banks, it continues to decline. There's really not much take up in spite of the massive liquidity injection of the BSP. I think it's really more the BSP taking a stance, okay, we have to maintain low interest rates in order to help companies recover. But the other side to that is the take up of loans. Banks are continuously quite conservative on their loan awarding, not only to corporates but also to individuals. And on the other side, the ones who would like to take on big ticket items, buying a car, a house, has been set aside. So a combination of several factors, banks becoming more stringent in their reviews, and the demand for loans is still not there because of the overall negative sentiment or the lack of positive sentiment towards economic recovery in the
Okay,
short
so banks, so still tepid loan growth
But
there is
the
moving forward.
PSP stating that we would need to control interest rates at a low level definitely would bode well for investors in general, especially in the equities market.
What about the property space, Mike? Is that going to be recovering anytime soon? Assuming, of course, that the BSP, the direction might be towards a rate cut. At least we have one analyst saying that that might happen because of if this recession persists.
Yeah, I think the right now after the disappointing 1Q contraction of GDP, I think a rate cut is back on the table for the BSP. Although the consensus is for the BSP to maintain, but with a disappointing GDP, um, March unemployment rate continues to be elevated about 7.7%. So that might probably be on the table again. But on the property sector, it's if you dissect the property sector in terms of office spaces, based on the recent um, announcements of the big property managers, Lee Chu and Associates and Colliers, I think on the office space continues to have some strong demand, especially from BPOs. On
Okay.
the residential front, there has been some decline in prices of assets, especially in the vertical, but it has been contained. On the ultra high, definitely it's not affected. It continues to be quite resilient. You can see from the property developers as well that they're launching new projects, especially on the horizontal space
Hmm.
outside Metro Manila. So there's
Okay,
demand.
so there is demand, and
There is demand.
the BSP still continuing on this easing trend that might actually bode well for that space. Mike, let's talk about consumption, particularly pure gold, and their earnings. It's very interesting to note here because you can see the share price actually, moving down,
Mm.
despite the fact that this is, quite an important staple sort of company, and it
Mm.
was even favored last year. Their sales were down actually by 7.9% in the first quarter, but their
Mm.
net income up 15%. What's going on here? Should not their sales have gone up, especially compared to 2020 first quarter period lockdowns? And why is that the net income is better? Does this have any indication on whether this company will be performing better in the next quarters?
Well, consumption is the biggest driver, but if you again dissect first quarter GDP results, it matches the performance of consumer names. Consumption continues to be at a decline.
Mm.
I think it's a function of several factors: loss of jobs, confidence levels as well, on taking slowly your consumption, and trying to be more prudent in your purchases. But I think for pure gold, as the economy starts to recover again, definitely it's the one that will take the lead. Since it's a staple, it should continue to recover.
Okay, so even the essential goods here were hard hit in the
Yes.
first quarter,
Mm.
despite the fact, as you mentioned, that
Mm.
it is, of course, a stock to be watching out for the
Mm.
next part of the year. Pure gold down by 2.5% amid those first quarter earnings. Thank you so much for those insights. That was, of course, Mike Enriquez, CIO of Sun Life Financial.
Thank you.
Here are the other headlines we're keeping our eyes on. April, car sales jumped from its extremely low base in April 2020 when Luzon was placed under the strictest form of a lockdown. Nearly 18,000 vehicles were sold last month. That's a whopping 13,000% higher than the measly 133 sold during the same month of last year. That's according to a joint report from the Chamber of Automotive Manufacturers of the Philippines and the Truck Manufacturers Association. Now, despite the massive year-on-year jumps brought about by the extremely low base, April sales of both commercial and passenger vehicles slipped month-on-month. Campi President Romel Gutierrez attributed the month-on-month slip on the reimposition of tighter quarantine measures in April. Gutierrez earlier said he expects the car sales to reach pre-pandemic levels as late as 2023. He added that recovery would be achieved with more market certainty, consistent government policies, and widespread inoculation against COVID-19. Now, the Transport Department is hoping to see a significant progress in the privatization of the Bohol-Panglao and the Davao International Airports by June and July, respectively. Transport Secretary Artugades says the government is now in talks with interested parties for the two airports regarding the technical concerns. Recall that Aboitiz Infra Capital submitted an unsolicited bid for the operations and maintenance concession of the Bohol-Panglao Airport. This was approved by the NEDA board in November of 2019. On the other hand, Chelsea Logistics was granted the original proponent status for the modernization of the Davao Airport in 2018. And more details on the magnitude 5.8 earthquake that rocked the town of Abra de Ilog in Occidental Mindoro. That's a few minutes past 9 a.m. today. The earthquake was felt in various parts of Luzon, including here in Metro Manila. Now, as of 9:30 a.m., PHIVOLCS has yet to report intensities, but it says no damage is expected. However, the agency said there are possible aftershocks from that jolt. And that's a first look into the business day. Today's Wednesday, May 12, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.